So today's topic is new challenges for rental property financing and how to overcome them. Now, we've been doing these webinar series as a substitute for the in-class sessions that we've been doing with GDAR, and they've been quite popular. So one of the things that I'm always asking for is feedback from the GDAR membership on what they'd like to hear. So we are trying to be flexible because we had a series of educational sessions booked for the entire year, and we've just had to rework them based on what was happening in the marketplace and with the pandemic. The other thing I wanted just to mention to you is I'm probably only going to be presenting for about 15 to 20 minutes. I'm going to go through this quite briskly, but there is a really great feature in the webinar series at the bottom of your screen. If you look at your screen sharing and the controls, where you can actually ask questions. So if you've got a question that comes to mind while I'm presenting, I'm going to answer that question at the end, and I hope I get a lot of questions because I love answering questions. So again, I love the feedback. I'd love it if you could reach out to GDAR and say, hey, I'm interested in this topic, because we are looking for interesting topics to talk to realtors about. And then if you do have any questions, just include them in the feed, and it'll show your name, and then I'll try to address the questions in a organized way. So let's get started. So if for most of you who've joined today know who the Mortgage Center is, but there are many folks, realtors, who don't know who we are. We've actually been in business for 20 years, and I think I've personally done at least 10,000 mortgages. So I know this job like the back of my hand, and I tell people it's just like walking. We love working with real estate agents, and we've been a GDAR Platinum sponsor. They created a new category this year, and I think we jumped on the sponsorship when GDAR approached us almost 8 years ago, and we said, yeah, this would be a great opportunity to connect with some of the partners that we work with, and some of the people that we don't work with, because we always believe like the financing is such a critical piece of when you as a realtor are helping somebody buy and sell a house, that we love working with educated real estate agents. So we just won an award. We are recognized in one of the top 1% of all franchises across Canada. So that's an amazing feat. And obviously now, like during the pandemic, you want to make sure that your clients are working with somebody who knows what they're doing. The cool thing about working with someone like our office is we actually do mortgages for most banks. So we do mortgages like for TD and Scotia. We also do mortgages like for credit unions like Meridian Credit Union, Duca, your neighborhood credit union. We have access to wholesale banks and then a whole slew of other financial institutions. And it's funny because in the olden days, people used to go to real estate agents first, and then the real estate agent would say, oh, have you been pre-approved? Where I think things have shifted now a little bit, and most people are now, and they're being more educated, are coming to mortgage brokers first, and then going to a real estate agent because they know that they need to get pre-approved for a mortgage. But if you do have somebody who's come to you who hasn't been pre-approved, we'd certainly love to help them. And you know, why send them to a bank or a bank representative when if something's wrong with their application and they're declined, for us, if there's a problem, we can switch gears and go to another lender. So just a little bit about us. So what we'll cover today is some of the new lender guidelines on rental property financing and why they've implemented them. And it's really great because we do work with a series of lenders. We've had the opportunity, and I've had the opportunity to talk one-on-one with some of our bank lenders on why they've made some of these changes, and there is a bit of rationale. Options for conventional rental mortgages. So, you know, with some of the changes, what are some of the options? We do finance a lot of student rentals here at our office. And I wanted to talk to you a little bit about that. Now, there may be a shift. I don't know if you've heard, but the University of Guelph is now going to be, for September, the majority of their courses are going to be online. So that there may be a shift in how many student rentals there are. Commercial versus residential lending on rentals. I just going to go quickly through that to give you an idea of what the difference is, because sometimes we do get accepted offers on commercial, or like it's a gray area. It's commercial and residential, and there are some issues with the offers. So I just wanted to review that with you, and then just talk a little bit about next steps in building your pipeline. So again, we've got a great, lots of information today. So what's happening? So many financial institutions, and you may have heard, because we do mortgages for Scotiabank. Here's the interesting thing. 65% of mortgages that are originated for Scotiabank are originated through mortgage brokers. So Scotiabank is actually one of our top lenders, and they're one of the lenders, and I know that there'll be other ones that are going to follow suit, where they are not allowing for borrow down payments on rental properties, and specifically on secured lines of credit. So the common strategy is, if someone's buying a rental property, let's say for 500 grand, you need 20% down, which would be about 100,000. And the idea is that instead of taking the money from your savings, that you would borrow it against your primary residence through a secured line of credit. Now, there are some benefits for that, and the main benefit is, one, a lot of people don't have access to 100 grand cash that's not tied up into investments. The other thing, to borrow that secure money as a secured line of credit from your primary residence, is that the interest on that investment loan, that real estate investment loans, becomes a tax deduction. So that is a huge shift, as you can imagine, because many people do not have those financial resources saved to put as a 20% down payment. And as I said, like Scotia, I know for sure right now is not allowing that. When I did talk to Scotiabank earlier or late last week, and I talked to my underwriter, and I said, you know, look, what's the main reason for that? Is because a large part of Scotiabank's portfolio was rentals. Okay, not student rentals, but like regular residential rentals. And many of the deferred payments on their portfolio was related to deferred payments on rental properties. So they've just decided to cool that down. I imagine there will be some other bank lenders that will follow suit as they kind of get more into this and see more and more deferred payments on rental properties. I did also speak, so that we don't know, Scotiabank did tell me that they are going to let up later, but of course they didn't commit to anything. Most financial institutions were allowing for deferred payments on a case-by-case basis for up to 6 months. So that, if I just did a quick calculation, when people started to allow, or when banks and financial institutions started to allow deferred payments on rental properties, and that 6-month time frame would come due in September, so in October. So a lot of these deferred payments that have happened, people are going to need to start making payments on that in September or October. Now, this poses an unusual situation, because I'm going to talk a little bit about financing student rentals. So if and I just kind of wanted to put that in the back of your mind. So how that's all going to impact things is really just a kind of a wait and see approach. So what are the options then for financing conventional rental mortgages? And when I say conventional rental mortgages, so I'm looking more at family homes or homes with a legal registered basement apartment, or anything up to 4 units. One of the lenders that we are currently working with that's been really encouraging and easy to work with is B2B or Laurentian Bank. And they actually have some interesting mortgage products and underwriting guidelines that allow for people to have multiple rental properties. So many banks have like a cap on how many rental properties somebody can own. Usually it's like 5 to 7, and that would include their primary residence. But for example, B2B or Laurentian Bank does not have a cap on the number of rental properties that an investor can have. Their only cap is that they can have only 10 mortgages or up to $2 million with B2B. So for example, if somebody has 20 or 15 rental properties, B2B will allow not more than 10 or 20 million in lending. They don't also allow mortgages in holding companies, but I find a lot of people aren't doing that right now unless it's a commercial building. We do work with some lenders that allow mortgages in holding companies, but obviously the borrowers have to personally guarantee it. And the other thing to keep in mind with some lenders is there are certain lenders that will allow 30-year amortization still on rentals, whereas B2B will only allow 25-year amortizations. And so that's sort of how they're mitigating that risk on they don't really care how many rental properties you have. Now, the thing is, you're going to say, how the hell can somebody qualify for so many rental properties and mortgages? Their underwriting guidelines are very unique, and I'm sharing this with you because you guys are realtors and you're interested in this sort of stuff. And I always get questions from clients on how much rental property can we use to qualify for the mortgage, the rental mortgage. And so underwriting guidelines are quite unique because they'll take 80% of the rents, okay, subtract the mortgage payment, condo fees, and property taxes. And then if there is a surplus, they will include that rental surplus as a total part of the person's income. And if there's a deficit, we include that as a liability, which is different than most other financial institutions because we can just take out all of the payments on the property taxes, condo fees, and the mortgage payments, and then include a surplus or a deficit. So it really frees things up. I'm just working with a gentleman right now who has 5 rental properties, and he's got a modest income of about $75,000, and all of his rental properties are cash flow positive, and he wanted to access some of the equity in the properties just to do some things for himself. And he was turned down by his own bank, so his lawyer referred him to us and said, you know, maybe you need to talk to somebody who can see this from a different perspective. So that was really encouraging for that borrower. So that are some of the options for financing conventional rental mortgages. Now, the other thing to keep in mind is how do we confirm the rental income? Especially if properties are going to now be vacant because students are moving out. And let's just say the borrower doesn't have a lease, we can actually use the statement of rental activities on their T1 generals, or many times if the property is vacant, what we'll do is we'll get the property appraised, but we'll confirm the rent through market rent. So there is an add-on when you order an appraisal for lending purposes that you can confirm a market rent. Sometimes when people are actually living in a property and then they're renting the basement, and they don't have like a formal lease, we can also get appraisals done with market rents on owner occupied. So just as a little side note. So that's how we would confirm income, rental income. And these are some of the options for conventional rental mortgages. So why are student rental properties an issue for mortgage lenders and what to do about them? Well, as I was preparing for this, I heard the announcement that the University of Guelph is going to be doing most of their courses online. And then I just thought of all of our customers who have student rentals. And my recommendation to them is if you don't have a lease, you may want to switch gears pretty quick and start looking at renting to professionals or families. And I imagine that there may actually be a glut of vacancies. And you know that the rental market and the vacancy rate is quite low in Guelph, so this might actually open up an opportunity. But you know, for landlords, such as myself and many of you who are listening to us today, we may start to see some softening in rents, right, which is going to affect cash flow. So there may be people who've owned rental properties that are sort of having second thoughts about the rental property. And I do think that you'll start to see more and more rental type properties come onto the market. Now, here's the interesting thing. A lot of these rental properties may be also suited for first-time home buyers. So I don't know about you, but we have done more pre-approvals in the last 6 months than we have in 5 years. So we've got a lot of people kind of waiting on the sidelines looking to purchase property. So, you know, again, this may be an opportunity for somebody who owns a rental property. If they haven't switched gears yet and converted their student rental into a family rental, that it could be an opportunity for them to sell it, and then you've got a first-time home buyer coming in to buy a property like that. So just some interesting times. Why are student rental properties an issue for mortgage lenders? So no banks or A-type lenders will finance student rentals. And I always get the question from real estate agents and from people who are looking to finance these properties. They have a bit of a stigma attached to them. And I mean, I've rented to students myself, but you know, the idea, there are some absentee landlords. The properties can get beaten up. So the collateral for the mortgage loan is often at risk, and that's why almost all of the bank lenders and A lenders will not finance student rentals. But having said that, there are different categories of student rentals, and we've had some really great luck financing homes, and there are different categories of student rentals. Homes that are in subdivisions, or maybe a townhouse complex that currently have students in it, but isn't like a student kind of ghetto. So let's just say if it has 3 or 4 bedrooms and it's a house in a subdivision, we can get those financed at quite reasonable rates. So for example, right now on a traditional rental property, the interest rates are somewhere in the area of 3 and 3 1/4, depending on the financial institution. If you were to refinance a student rental, you'd be looking at an interest rate of 4.5%. So depending on what your what your experience is, you might think that's a high rate or a low rate. What I usually tell my real estate investors who have student rentals, let's just make sure that we're cash flow positive. And remember, you don't want to pay more interest than you ought to, but as long as the property cash flow is positive and you can access the equity that you want, this is also a good option. So I was talking a little bit about the different categories of student rentals. Again, we have had some good luck financing student rentals that are not kind of student flop houses. So one of the things that I wanted just to kind of bring to your attention is sometimes landlords convert like the living area into a bedroom. That's a no-no, and you probably are looking at private lending for something like that. The other thing is that there are some student ghettos or hotspots in Guelph. And again, I think that's going to change given sort of the transition with the pandemic and what's happening with the university towns. There are many of the lenders that we normally work with that won't finance in student ghettos. And then there are the category of a legal lodging house, which may be more of a commercial type of mortgage. So that's just summarizes some of the categories. I wanted to, as we keep going, I just wanted to check the time. It's been just over 20 minutes, but I wanted to review commercial versus residential lending on rental properties. And I don't know if any of you have there are no questions. I can't believe that from a group of realtors. If you guys wanted just to submit a question or two, I don't know if you guys are scared to, that it's a stupid question, but there are no stupid questions with us. So if you do have a question, if you could put it forward. But if you don't, you can always email me. Commercial versus residential lending on rental property. So I have seen some offers that have come through where the financing condition is more of a financing condition for a residential property than it is a commercial property. And sort of there's a gray area. So any apartment style, like a multi-family apartment style building that has 4 or more units is considered commercial. Or let's just say my office is in sort of the downtown core of Guelph. A lot of the buildings in the area have like a commercial component and then a residential component. So whenever, it doesn't matter on the zoning, but you know, it's the highest use of the property. So a couple of things that you want to keep in mind that when you're pulling together offers on these properties that sort of have a gray area, obviously talk to the person who your borrower is working with to finance the property. We usually find that the financing condition for commercial versus residential lending is a lot longer, and then the closing date is shorter. So for example, the financing condition would be 4 weeks, and then we typically have a closing of 2 weeks after that. And then you're going like, well, why is the financing condition 4 weeks and not 3 to 5 or 7 business days? And the main reason is that we need to get a commercial appraisal done up front before the lender will issue a commitment. So typically the process is that we would gather the borrower's information, collect the MLS, get the accepted offer, and then we order the commercial appraisal right away. And the cost right now for residential appraisal, the cost is about $400. For commercial appraisal, depending on the type of property, you might be looking at somewhere between $1,500 and $3,000. And this is like smaller commercial buildings, usually anything under like $3 million, okay, as a purchase price. So the appraisal, we get started on it right away, but that appraisal typically takes about 2 weeks. And then the lender will not issue commitment until the appraisal is done. So again, keep that in mind. Those are the main differences between commercial versus residential lending. And I wanted to bring that forward because I have seen some offers that have come through that only had like a 1 week financing condition. And so, and remember, anything with 4 or more units residentially is considered commercial. Okay. The other thing about financing residential versus commercial units is there are typically more down payment that's required. So typically 25 to 35%. The amortizations are shorter, usually 20 to 25 years instead of 30, and you're looking at slightly higher interest rates. So those are some of the main differences. So just to wrap things up, and you know, I'm always thinking about giving you some idea of what you can do to sort of project your business, especially with this slowdown. And I know we've done this at our office. Look at your database. Anybody who has likely bought a property in the last 5 to 7 years has some good equity in the property. And they may be good candidates to, because they have equity in the property, they may be good candidates to purchase a rental property. Now, I also wanted to make sure that these are also clients who have good job stability. We obviously won't want to follow up with people who have had deferred mortgage payments or have struggled with job loss, because if they're having a hard time making ends meet, you know, through this pandemic, recommending purchasing a rental property is not a good idea. Okay. Follow up with email or a phone call. We have actually an excellent tool at our office called Purview, and we use it as a tool to for refinances because it gives us a valuation on the property through Terranet. So it just kind of gives us a ballpark on what the property might be worth. It also shows who's registered on the title of the property. So when we get a call and the person says, I own this property, we can check it out to see if in fact they do own the property and who else is registered on title. But what we've been doing with our clients is we do regular annual reviews with them for those of the clients who take us up on the offer, and we send them a Purview report, and we get really great feedback on that. And I know Purview is very similar to what you guys do on GeoWarehouse. Schedule an appointment to review their options. Now, I am totally open to doing like a three-way Zoom call with a client that you may have. And it's really a powerful brainstorming session with the client because we've got the realtor there and the mortgage financing person, and you can really narrow down and answer any questions that the client would have in purchasing a rental property, and then just go start looking for a rental property for them. So, I mean, that wraps things up for today. And I do notice you can always I have a great feature on our website. If you go to skipthebank.ca, you can actually schedule a 15-minute telephone consultation, or if you'd like, you can just email me your questions. And I do notice that Donna Ferraro has raised her hand, so let me see if I can find Donna. But what I'd like, Donna, if you could, maybe on the Q&A, I noticed that you probably have a question. If you wanted to just go ahead and ask your question in the feed, that would be great. So give me a second here. We've got some. So question, we've got some from Greg Turvey. Which areas in Guelph are considered student ghettos that some lenders would avoid? You know, that's actually probably a better question for a real estate agent. I don't know if, so I don't know if you have any feedback on that, Greg, but again, there are sort of hot spots where there are congregation of students. One of the things I do know when I went to the University of Guelph is a typical student ghetto was around Cole Road. Now, I know that that's transitioning, but I actually think that that would be a better question for you as a real estate agent. So the Esther Huang has a question here. For student rentals, does it make a difference for a mortgage if you have a group lease? This is an excellent question, actually, Esther, because there are different ways to set up leases. There could be one lease with all of the other people who live in the property. So you can make the lease out to one person. And then if you look at the Ontario lease, you can list all of the other people who occupy the property. So that one person is in charge. Some leases I've seen had 4 people, like 4 unrelated people to them. And then there are other landlords who sign individual leases with individual people. So if you have 4 or 5 people living in a house, you know, you might be charging $600 for a room. So for student rental financing, the way that we have to do it now, it doesn't really matter how you set up the lease. But there are different ways to set up the lease, right? I think it just depends on what the landlord prefers. I certainly, when I rented to students, I wanted to have everybody on one lease, and I sometimes even got the parents to co-sign for the lease. Because if you have if you're collecting individual checks from individual students, and let's just say one student doesn't pay, like how do you deal with that under the Tenancy Act? So it's very we've got a question here from Donna. Did you say the appraisal fee for a residential property is approximately $400? Yes, I did. And that varies depending on the location. So most appraisals have gone up. And the reason for that is just because it's taking appraisers more time to do appraisals. And again, it depends on the location. Like in a major urban center, it would be $400. I'm actually doing an appraisal right now for a gentleman who lives in Drayton in a more rural area. And because the appraiser has to drive to the location, they factor that into the cost. And then, I mean, if you're going really remote, most appraisers take into account the driving time. So I hope that answers your question, and I think it does, Donna. So that wraps things up for today. I certainly thank you for your questions. If you want to pick my brain and schedule an appointment, by all means, just go to skipthebank.ca and you can book a 15-minute consultation. Also, I would say recommend following us on LinkedIn, Instagram. We do a lot of great posts there. We're at Skip the Bank. And then also Facebook at the Mortgage Center, Guelph. Okay, thanks for joining us. You guys have a great day. Bye for now.